Hi everyone. Today we will do a little exercise in Chapter 2, learning how to build basic financial statements such as income statement, balance sheet, and statement of cash flow. And also we will learn how to build common size financial statements. So let's just first begin with the income statement. Okay, so you have Big Rock Candy Mountain Company's income statements for years 2015 and 2016. So before we begin, let's just start to take a look at the item names. So it starts from sales and all the way down to net income. So one thing you have to remember is it's always better to go from top to bottom. So it's a top-down approach. That would be the main way. And whenever there is an obstacle or hurdle that you cannot solve for, then you go the other way around, which is bottoms up, okay? From net income to sales. So that is the key thing that you have to remember when you're dealing with an income statement. Okay, so let's begin with 2015. So you start from sales and then go down to COGS. And the next thing you find is gross profit, right? And gross profit is always the difference between sales and cost of goods sold. So let's type in the formula, which is the equal sign, and then sales minus cost of goods sold. Right? So you have the gross profit, and then go down to find the next blank, which is net operating income, and this will be gross profit minus all the expenses that are listed here. So equal gross profit minus all the expenses, depreciation minus selling and admin expense minus other operating expenses. There we go. You have 2015 net operating expense. So another name for net operating income would be EBIT, which is earnings before interest expenses and taxes, right? So what it means is that you have to take away interest expense. So let's do that to find our earnings before taxes. That will be net operating income minus interest expense. There you go. You have the earnings before taxes. And here, another name for earnings before taxes would be the taxable income. So what taxable income means is your tax amount is decided upon what you see right over here, which is earnings before taxes, okay? So you have to apply the tax rate to this income if you wanted to calculate the tax amount, all right? So the tax amount will be, again, this amount, which is earnings before taxes, times the tax rate that is given. And there you go. You will have the taxes. Okay? So you have your earnings before taxes and taxes, right? So your net income will be earnings before minus taxes. And you have the net income amount. Now, let's repeat the same steps with fiscal year 2016. So again, the main approach should always be a top-down approach. So we start from sales, okay? So we go to sales and find out that the COGS is missing, right? But don't panic because we have our gross profit amount. So one missing value, but the other two is given. So this is easily calculated. So this should be sales minus gross profit, right? And this will automatically calculate COGS for you. And then go down and see what's missing. Okay, so for here we have depreciation and not net operating income amounts missing. So for one step, one section here, two missing values, see, right? So what it means is it's a hurdle or an obstacle. So whenever we are facing an obstacle, we have to go the other way around, which is a bottom-up approach. So go down to the very bottom, which is the net income, and let's take the other route. All right. So from here, net income to the next missing, which is earnings before taxes. Okay, how do we go there? So this will be the sum of the two, right? So earnings before taxes, this should be net income plus taxes. Okay, and it will be earnings before taxes, and it should go up, right? So how do we do this? This will be earnings before taxes plus interest expense, right? So what you can see is as we go to the top, we're adding everything, all the expenses back. Okay, so now that we have net operating income, what it means is there's only one missing value that we see. Okay, so how do we get depreciation? So we remember that from gross profit, we subtracted all the values to reach net operating income. So taking the other way around, this will be obtained by gross profit minus all the expenses and also net operating income. Then we will get the depreciation amount. So that should be gross profit minus this one minus this one, and also net operating income, then we will get the depreciation amount. So we have just completed our Big Rock Candy Mountains income statements for the 2 years.